Greg, are you able to hear me?
I can see it, Josh.
You can see the presentation?
Yeah, it's well, I see the it just says Stelvio Equity Group right now.
Okay. All right. That's good.
Same.
Thank you for the input there.
You're welcome.
We're going to go ahead and get started. We were kind of hoping that we'd be able to you'd be able to see our face on there, but this camera's giving us a little bit of a hang up here, so I appreciate your patience. Just a little housekeeping before we start. If you guys can please keep your mics on mute. We will limit this meeting to a 30-minute meeting. A lot of that's just due to the time restrictions that Zoom has. If you guys have any questions throughout the presentation, feel free to text my cell. Most of you guys should have it. Everyone on this call should definitely have it, I see. And we will also upload this presentation to YouTube later if you want to review it at a later time. With that, I will turn it over. Nope. What we will do, we will cover today some introductions from our team. A lot of you guys have not been introduced to Mark yet, so we're excited to introduce our full team to you. We will cover the ALMA project, SEG ALMA, SEG Covington Cove LLC, the distribution calendar, company goals, a special thank you to you guys, and cover any questions at the end.
Hi guys, this is Mark. I'm Mark Devereaux, partnering with Josh here on these projects that we're doing. My title is our CEO and managing member. I was formerly worked at Maine Beverage for 28 years, their local Budweiser distributor. I was a CFO and did a lot of things down there, but I've been investing in real estate since 2002. And between my wife Kelly and I, we've completed about a little over $10 million in transactions, all locally. Started flipping houses, got into some smaller multifamily, and now we're into the projects here that we're doing with Stelvio Equity Group. I wanted to introduce Kelly a little bit too. She's not with us, but she's my wife and had business partner, and we've been doing this stuff, like I said, since 2002. Kelly is our day-to-day operations, tenant relations, takes the tenant from leasing a new apartment, getting them all the way through, and then turning over the apartment. So she's super instrumental in what we're doing here. And then Josh, you want to say a couple of things?
Sure, why not? You guys know me, the Chief Development Manager here at Stelvio, and you know what I like best, building relationships and doing deals, and that's what's brought us together, and we're all glad to have you here today.
And then just a little bit more expanding on our team. These people on the left-hand side are going to be physical team members for us. So obviously got Mark, Josh, Kelly, and then real instrumental guy is Sean Splaney. He's our head of maintenance. He's running maintenance for all of our property right now. But as we're growing here, we are looking for currently a maintenance tech and then an assistant property manager. So we've grown sufficiently that we're able to take those two positions on board. And then on the right-hand side is what we call independent team members, people that we work with to get the business plans done. A couple guys at the top, they're high-level brokers at Income Property Organization. We have an attorney on board, Tom Lapcott of Lansing. We use Rob Dorsey. He's in Owasso, he's a CPA. And then just our lending partners that we have right now. And then we're talking about team, and just a little bit more about me. I just put this in for personal reasons. My son is Trent, who's currently playing football up at Alma College. So we have a connection to Alma. It's not the reason we looked at Alma to buy property, but It's one of the reasons, but he kicks off his season this Saturday. And I just thought it was a team thing. We'll go with the sports thing, but so yeah, that's us. So moving on, diving right into the Alma property. We closed on that July 9th. The property consists of actually a portfolio. It's 3 separate properties. Mary Court has 24 units. River's Edge has 8 units, and Wright Avenue piece has 21 bedroom units. Basically what we're looking at now, after taking over, is that the tenant base does need some work. We had anticipated that. What that means is there's a few people over there that aren't used to paying rent on time, aren't used to paying full rent and things like that. So it's our job to start fixing that kind of stuff, and create some different expectations for the tenant base and what they're going to expect from us and what they're going to expect out of themselves going forward. So expectations, the reality versus what we thought. Again, they've been neglected, but that's our opportunity. As we provide the value and as we meet their needs, then that becomes more valuable, which means that we are able to push the rents to where we need to, and they don't see it as we're just coming in and, you know, making the rents go higher for no value. So typically, and on this property, when you take over, new people in town, they want to tell you about all their problems, things that haven't been fixed for years. And we get that, and we're getting it, and we're working through it. So, but that's normal. But all the properties are solid. They're, you know, mid-70s vintage or so, but they're solid with, you know, the expected amount of work to be put in. Financial wise, of course, we don't have a lot of history right now because we've only had 2 rent rolls. We've had full August. We inherited basically July because we closed on July the 9th. And then, so obviously September will be, I guess, what you consider our 3rd full rent roll. We are dealing with some delinquent issues. A few people had some accounts that need to be brought up to date, and we'll get into that here in a minute. But there is SARA funding out there. SARA stands for, I got it on the next slide. I can't remember the acronym, but we'll get to that. But it's a government program you may have heard about that's helping people pay rent, and it's actually a pretty good program. Works out good for landlords. So our immediate focus on Alma is rent roll and collection, making sure we're charging the proper rent and making sure people are paying it, and to reduce that delinquency factor to get the cash flow rolling. Right at the beginning here, we're going to be very, very careful. Expense control. We're not going to go out and blow the budget on a bunch of unnecessary capital improvements right away. We're going to just wrap our hands around it a little more, and you know, see if that tenant base is actually going to fit what our model needs. And then again, marketing and awareness is severely lacking over there, so we're working really hard to do that. And then long-term, meaning a year and beyond, you know, the key to good rental property is to serve your tenant base, give them value for what they're paying for. And then with that, you can improve your tenant base. So you can get the tenants that respect your property and respect their neighbors and respect that, you know, you need cash flow to operate. And then continue to make strategic improvements, studying our budgets, studying our plans. Again, marketing is key. Name recognition, you know, your reputation for what you do or what you don't do is very important. And then we're going to be a little bit aggressive. We want to hit our target rents by year 3 of a 5-year plan, which would provide some flexibility for the whole group here. So, Josh, we're just going to roll through a few reports here and kind of give you an idea, an example of what we're looking at. Now, we don't have a lot of data on this, so we're still kind of working in the projection mode, but we're starting to build it. So this is a profit and loss statement for the whole portfolio of Alma. Just some key points. 31 grand being through two rent cycles is not really where we want to be. So we have to continue to work on that. We inherited some of those delinquent accounts. And then if you're getting over here on the expense side, we haven't calculated in our closing costs yet. So the expense side will go up a little bit. A lender required a full flood policy payment at the beginning. So that exacerbated our insurance right off the bat, but that'll level out throughout the year. And again, this right here is an example of why we're going to be very slow on the expenditure side for at least 2 more rent cycles. We're actually showing a.
May I jump in real quick?
Yeah.
Mark, I just want to bring up one thing and something that I've discussed with you guys. We covered quite a few negative points that we're going through right now. But you have to remember when we're vetting this deal, this is exactly the type of thing we're looking for. These are poorly managed properties. These are opportunity zones. They just take a while to turn that ship around. So it may sound a little overwhelming, but you have to remember this is what our team does. We vetted this. We know what we're getting into. And again, this was a poorly managed property. So a lot of opportunity.
Yeah, and then we'll get to that right at the end too. We'll show our I can't remember the name of the report, but it shows our market now versus where we're going. So this is a good slide. Vacancy. We're showing only 3 vacant over there right now out of 56. We also included our total portfolio. So if we added in Meadowview Apartments, that we have 99 units over here plus the 56. So out of 155 units right now, we're showing like we only have 4 that are vacant. That's like sub 3%, which is probably not sustainable, but that no one underwrites properties at 3% vacancy. I mean, the industry standard is 7. So really strong. So again, we have to work on, collecting and people paying. And that's another reason I kind of like these tertiary, these smaller markets. I like them because people aren't building apartment buildings in good small towns. So that kind of limits your competition and it limits your doors that are going to be in those towns. So you still have to be within reason on your rents and things, but it gives you some flexibility there.
On a positive note, also, there is a developer that we are friends with that is putting money into that community, a boutique motels going in, and there's some other signs of activity. So that's all good. Very good.
Absolutely. So this is delinquency. This left side here shows at the beginning when we inherited. Skip down to the bottom line, we inherited like a little over 11 grand that the tenants had owed at closing. So we inherit that. And like I said, here it is. It's a COVID emergency rental assistance funding. It's your federal funding. You may have heard about like eviction moratoriums and rental assistance and all that. This is the local money that's available in Shiawassee County. I believe CACS is the holder of that money. Over in Gratiot County, where we're at in Alma, It's the United Way. It's a pretty slick program. Basically, anybody that applies that's behind on their rent and can attribute it any way, shape, or form to COVID gets paid. So that means we get paid. So if we skip over on this other side, I've highlighted the ones that are on the books to be paid by Sarah, but we're looking at about 30 days out. But we got about 7 grand out of the 8 or so that's still going to be owing. So that's good. And then you've probably heard about eviction moratorium. It's in the news a lot. Our experience is that what's in the news is not what's happening. So in Shiawassee County, for sure, people don't pay. We send them 7-day notices. If they don't pay within that 7-day notice, they get a court date. We take them to court. We communicate, and either they pay or we're going to vacate. So we have evicted people through COVID for non-payment of rent, and everything else stands too. So I mean, people doing drugs, people, you know, breaking their leases, you know, it's almost a misnomer that it's an eviction moratorium, at least for Shiawassee and Gratiot counties, because it's darn near business as usual. So this is our goal slide, I guess. This is our market rent analysis. This shows us the work that we have to do. Lease rent is what we're charging now. Market rent, we set that to our 5-year goal. So it's not necessarily, hey, what the market is. It's what we see and we feel we can hit within 5 years. So this is like our goal sheet. And again, we track this monthly, and we always want to make progress toward that goal. So if you look at this gain or loss to lease, this kind of shows you where your differences are. And we have some pretty good differences. $140 in rent, that's a stiff, pretty stiff. But we have some that are close. And if we get to the next page, kind of levels out the story a little bit. Right here, per unit average, we're going to basically have to eat up that 10%, and we want to do it in 3 years, but a 5-year run for sure. So if you're talking a 2 to 3% rent increase per year, that's not insurmountable. That's absolutely doable. So that's again, like Josh said, that's why we like these properties. They're severely undermanaged. So now let's get to SEG Covington Cove. That's a Saginaw property. We're facing some hurdles on that to trying to get to a closing date. We don't have one yet. It's a government loan serviced by Pinnacle Financial out of Tennessee, but Freddie Mac is the entity that loans. So it's a government backed loan. There's so many hurdles, like Josh and I were talking, to get a loan from a credit union or from a traditional lender like we've done in the past was pretty darn easy, actually. A lot of work to do, but this loan in particular has been about quadruple that, just from the amount of information they want from us personally, to our entity, to our business plans, to management plans, everything. So challenges we're facing are the time. It's running into once you get past the 30 days beyond your goal, 60 days beyond your goal, now it's like, boy, that's an issue. Freddie Mac is a hurdle. The bondholder, the people that own the paper, that own this loan, is an outfit called DCH. I don't know how to say it other than they're being a little difficult. So we have hired an attorney. His name's Tom Lapka out of Lansing to help us navigate through all this paperwork and all of these. I mean, they literally want to change sentences in a 300-page loan document. So it's very, very detailed, very time consuming. One sticking point that is unforeseen on this project is that they are going to require us to hire a third-party management company. Because between Josh and I, their defense is that we just don't have enough multifamily. We don't own enough multifamily, and we haven't managed enough multifamily to meet their stringent requirement. So our solution to that is to actually hire the third-party management company that's already managing the company, which is actually owned by the seller. And he is basically cutting us a sweetheart of a deal to get to a 1-year timeline to get Josh and I to that threshold where we don't need this third-party management. What third-party management means is that we still own, we still manage. They just put their stamp on it. That's the agreement, and that's the way it's going to happen. Any of that money comes out of our pocket, not the investor's pocket. So it's not an added line item expense. We had already expensed management expenses, so that's where it's coming from. And we'd be happy to answer any questions on that, because it is something that's a challenge on this deal. Benefits of Saginaw, why we would continue to pursue. Once we do get in the program as a preferred borrower for Freddie Mac, Fannie Mae, these are government loans. They're better loans. They're better terms. We can pass that on, and we can provide better terms for people who choose to invest with us in the future. That also provides credibility to our group. So Stelvio Equity Group now going to the table. We have street cred with the seller, with the brokerage houses. This particular seller owns about 1,200 units in Michigan, all multifamily. So there may be some opportunity to either source deals or buy from him again.
That's a great point, Mark. Keep in mind, none of the units we've ever purchased have been on the market. We have utilized relationships, and that is the key, one of the keys to our success. And we will continue to utilize this seller moving forward. That's a key point, I believe.
Absolutely. And they've been telling us there are 4 deals happening right now. Sorry, we just had a thing pop up. They removed the 40-minute timeline on us. Zoom gave us the gift. But anyway, there's 4 deals happening in Saginaw right now, within about 3 miles of where we're at. They're selling for 75 to 100K a door. We're getting in at about 45K a door. Not the same exact property, but we believe there's instant equity to be had, to the point where the lender actually said, why don't you do a new loan? Property prices are through the roof. So there's a real possibility we may be able to cycle this thing quicker. But that's not the plan. That's not the business plan, but we're just, it's a nice bonus.
For peace of mind, we are in excellent position moving forward. It's good. I know I ran into Greg the other day, and that's exactly what I mentioned. So it's good that we highlighted that.
And then your money, it's tied up. We understand that. It hasn't been working yet. So we are planning to pay for that over the life of the investment at about an 8% annual, which equates to about 0.75% per month. So we do recognize that.
skip that.
That's just the market. This is proof that we have the money. It's available. It's sitting in Huntington Bank, ready to be deployed. Josh, predicted distributions.
Yep, there's some people on this call that have participated in previous deals with us, so this will be very familiar territory. But as far as distributions are concerned, to give you an example, so Q1, so we're talking January, February, March as an example, would be paid out May the 1st. So they run on about a 31 day delay from the end of the quarter. So again, moving forward into Q2, April, May, and June would be paid out August the 1st. And then for a prime example, as we closed on Alma in July, so we'll have July, August, September, Q3 would be paid out around 11/1. We will be in communication about that moving forward as we're working forward to hit projections.
Let me skip. We're running out of time here, but we have some company goals. We can share these with you at a later time. And then we're going to get toward wrapping it up here.
Guys, the bottom line is we just wanted to thank you, this team that's come together. We are all here because there is a relationship involved. That relationship's evolved into a partnership, and trust is also a key element there. Your commitment. The vision moving forward would go more or less to that last slide. Stelvio is a company that is moving forward at a good rate. We are making strategic plans, calculated plans to continue to grow this company year by year. And so we will have other opportunities as we move forward. And if you know of other people that would like to participate in something like this, and once you get your feet wet and you're comfortable with it, we would certainly like to be introduced to them and continue to grow together. So this has been fun. On a side note, 75% of the investors that came together on Meadowview, the 99 unit that we own currently, 75% of those investors went forward with us on the Covington Cove and the Alma project. So we are performing, and we will continue to perform. So we thank you again.
And then what's next? Just continue to be on your investor portal. Our emails is a great way to communicate with me for sure. Josh, you like texting, phone calls a lot.
Don't hesitate to give me a call.
So those 3 ways. And then quarterly, we'll plan on meeting at least quarterly via Zoom. We'll get our kinks ironed out here so we can do video. That kind of sucks that we didn't. And then obviously distributions. And then we just need to execute, work our plans, answer questions as we go, completely transparent. Don't be afraid to ask. I know nobody's afraid, but please ask us questions. We don't always know what you're thinking or what you need to know, so please provide us feedback. And then the plan is to exit these puppies and get everything done. These are the ways to get a hold of us. And like I said, reach out to Josh or myself, and we're just trying to get better and make this better for our investor pool. What do you guys need to know? We sometimes think we know what you need to know, but I guess we don't know what we don't know. So if you could tell us what we hit, what we missed, what are you looking for? We can absolutely work toward getting better at that.
That sounds great. Thank you, Mark.
So
That's all we have for you today. We appreciate your time, and we'll be looking forward to communicating here in the near future. So have a great holiday weekend. And again, thank you for your time.
yeah, happy Labor Day. Thank you.
Thanks, guys.
You're very welcome. Go in there. Stop and end it. End meeting for all.